Coming up on Market to Market. U.S. farmers slowly harvest what are expected to be record corn and soybean crops. National Geographic unveils a free iPad app examining the challenges of feeding a burgeoning global population. And Dr. Norman Borlaug, the father of the Green Revolution, is immortalized in bronze. Those stories and market analysis with Darren Newsom next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, October 17 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. U.S. consumers tightened their purse strings last month as purchases of autos, gasoline, furniture, and clothing all declined. According to the Commerce Department, seasonally adjusted retail sales dropped 0.3% in September. Auto sales fell by 0.8% last month in the wake of a 10.4% gain in August. Declining gasoline prices also contributed to a slowdown in retail sales, as purchases at service stations fell slightly less than 1% in September. And the AAA reported Friday that the national average price for a gallon of unleaded gasoline fell to $3.14 per gallon, down 16% from August. And despite rallies on Friday, Wall Street posted weekly losses again this week as the October sell-off continued. Grain and oilseed prices bucked the bearish trend, but the impact of record production is yet to be fully known since Mother Nature is delaying the harvest of what's believed to be the largest corn crop in history.
Nationally, only 24% of America's corn is in the bin. That's up 7 percentage points from last week, but still well behind the 5-year average pace of 43%. The soybean harvest is progressing at a faster clip. USDA estimates 40% of the beans have been combined, up 20 points from last week, but they too trail the 5-year average of 53%. The cotton harvest is underway as well, and it's running right on schedule. So far, 22% of the crop has been baled, compared to the 5-year pace of 24%. Next week's progress report is expected to reveal little movement in the grain and oilseed harvest since much of the Corn Belt received several inches of rain this week.
A looming decision from the Obama administration on the amount of ethanol to be blended in America's gasoline supply is a big factor in the outlook for corn prices. But a final ruling is not expected prior to the midterm elections next month. In the meantime, however, the Renewable Fuels Association released a new advocacy app this week, complete with facts, talking points, and of course, a congressional directory. But the RFA wasn't the only organization reaching out to consumers on mobile devices. In honor of World Food Day this week, the National Geographic Society announced a multi-year commitment to food security. And while the magazine has been published continuously since 1888, Nat Geo launched its latest effort with a decidedly newer form of communication, a free app for the iPad.
In addition to a special companion website, natgeofood.com, National Geographic's free Future of Food iPad app includes all published stories from the magazine's current series on food.
We want to start a conversation to try to get agriculture and food back in the public discourse, to get people to think about where food comes from, what it takes, how incredibly huge this enterprise is, but also how fragile it is too.
The app uses rich storytelling, interactive maps, and of course, stunning photography to reveal a multifaceted perspective on the challenges and solutions to feeding a global population expected to reach 9 billion by 2050. Paralleling the magazine series, each topic begins with a simple question. like why are people malnourished in the richest country on earth? But the content that follows vividly explains why the answers are anything but simple. And by considering a diverse set of food-related issues, National Geographic's free Future of Food iPad app offers a comprehensive examination of the pitfalls and potential of possible solutions.
I think one thing that we need to think about here, though, when we're trying to solve this challenge, meet the challenge, it's not one or the other. It's not big, it's not small, it's not organic, it's not GMO, it's not high-tech, it's not low-tech. It's all of the above. We're going to have to engage every available way of solving this problem if we want to meet the challenge of feeding everybody in years ahead.
Any discussion on the challenges of feeding a burgeoning global population would be remiss without including Dr. Norman Borlaug. Borlaug is believed to have saved more than 8 billion lives by developing high-yielding strains of drought and disease-resistant wheat. During the 1960s, the hybrids played a crucial role in preventing famine in developing countries, in a movement that came to be known as the Green Revolution. Borlaug won the Nobel Peace Prize in 1970, and to this day, he is the only person from the agricultural community to do so. Borlaug passed away in 1999, but thanks to the vision of those who knew him best and the work of a talented team of artisans, his life and legacy live on as the father of the Green Revolution has been immortalized in bronze.
I grew up on the land, on a small farm in northeast Iowa. This farm was composed of only 50 acres, only half of which was cultivated land. Life was not always easy.
To honor the man credited with saving more lives than anyone who has ever lived, a statue was commissioned to be placed in the U.S. Capitol. A Midwestern artist began work on the project in 2013, and the piece arrived in Washington last March. But the journey from conception to completion, like the work of Norman Borlaug, required a passion for excellence and painstaking attention to detail.
I want to flatter the good characteristics of Norman Borlaug. Obviously, I want him to be heroic because he was heroic, and he is heroic to all the people that he helped. But at the same time, you have to have that human side in the face, in the pose, to make them feel like they could walk off that pedestal. For me anyway, that's my style. That's what captures me in art when I view other artists' work. Like if it looks like it could just step out of that painting or step off of that pedestal, or it pulls me into it, then it feels like they're alive, they're real, and I can relate.
Remember to select for things that you need in your own country, back home, to fit your own situation. Those of you from India and Pakistan where part of your wheat is grown under irrigation, be sure you're selecting the short dwarf plants. This is a plant that's too tall for irrigated conditions of India and Pakistan, but under the dry or semi-dry conditions of Afghanistan is probably what you want.
I used the photo of him in this pose, the famous photo, and then just basically judged off of that comparatively to his height and, and figured it out pretty closely. This whole bronze process, which took about 4 months now, 3 or 4 months. And so in that process, like I said, goes through all these steps and all these hands and artisans that are experts in their field. And then when they finish out the piece and you get it exactly how you want it, then it has to be taken to the site and based as well. So it's a lot of process involved. And I think most people don't realize what goes into just creating one single statue. I had a mold maker come up from Loveland, Dan Oaks, and made the molds right in my shop. Then we loaded up the molds, crated them up, and shipped the crates to the foundry here in Berkeley, where they poured the waxes and chased the waxes and then sent them through the lost wax casting process, ceramic shell and burning out the wax and then refilling those ceramic shells with molten bronze, and then cracking off the ceramic shell and then having the bronze finished piece welded together, chased, and then of course at the stage we're at now with the patina, the coloration. And so each step takes experts in that field. And so the foundry has workers that work just in that area, and they're particularly skilled in that area, and they'll manage that little portion of the process. And at the end, you have a great bronze piece, hopefully.
I think it is important for us to periodically modernize the message of Statuary Hall. There was no single person who dedicated agriculture in all of those statutes. Now there will be.
Looking at it, it's just so fulfilling to see him in here in Statuary Hall, in his place, where he should be. I mean, it's just amazing.
And I am not one to sit idly by and see man breed himself into a corner by increasing his numbers faster than food production is being increased. And if I have anything to contribute to this world, when I know that our scientific facts are right and we have materials that can be brought together in a meaningful production program, I'm going to play that card and play it hard.
But I think if Norm were here today, he would want someone else to be acknowledged as well. Because Norm didn't do this by himself. As great as he was, as visionary as he was, he needed partners. And those partners were the farmers of the United States and of other countries.
His work was at the forefront of a 50-year period that has been described as the single greatest period of food production and hunger reduction in all of human history. Not bad for a farm boy from Cresco, Iowa.
Now his legacy and pioneering work will be on display to educate and inspire millions of people who come here to visit the United States Capitol.
Next, the market-to-market report.
Standing by. Reflecting the decline in grain prices, Creighton University reported this week that its rural Main Street index fell nearly 5 points this month to 43.4. That's well below growth neutral reading of 50 and the lowest tally in more than 4 years. The researchers blamed much of the downturn on a stronger U.S. dollar, weaker global growth, and a 30% decline in grain prices over the past year. This week, however, futures prices rallied. For the week, December wheat gained 18 cents, while the nearby corn contract moved 14 cents higher. A delayed U.S. soybean harvest and dry conditions in Brazil pushed prices nearly 30 cents higher on the November contract. Nearby meal prices followed suit with an upward move of $19.50. In the softs, cotton reversed course this week, shedding $1.10 per hundredweight. In the dairy market, November Class 3 milk lost 19 cents, while the deferred contract fell more than 60 cents. A tough week over in livestock as the bears returned, with the December cattle contract losing a quarter. Nearby feeders declined by $5 and a nickel, and the lean hog contract shed $3.82. In the financials, the euro lost another 34 basis points against the dollar. Crude oil continued its free fall as the November contract settled with a weekly loss of just over $3 per barrel. COMEX gold advanced more than $17 per ounce, and the Goldman Sachs Commodity Index lost more than 14 points to settle at 540.40. Here now to lend us his insight on these and other trends is one of our regular market analysts and noted Kansas City Royals fan, Darren Newsom. Darren, welcome back.
Thank you, Mike.
It's been an exciting week across the board.
Absolutely.
Royals fans in particular, and participants in the grain markets. As we look at this wheat market, Darren, we're on a 2-week rally.
Yeah.
As we sit here today, are we to a point where producers need to be making sales?
Interesting things have happened in this wheat market, and I think most notably, the Kansas City December to March spread has gone inverted. Why? Makes no sense, because it's not like we're running out of wheat, but all of a sudden we've got the commercial side of the market kind of taking the reins in Kansas City, which is still the largest wheat crop that the U.S. grows, and they're pushing it higher. And as you said, we've been on a 2-week rally now. Seasonally, the wheat market moves up through the month of October. So it looks like we've got a little room in here. Makes not a lot of sense, as we'll talk about in the other grains as well, for the markets to be rallying, but it looks like wheat wants to try to push higher. The U.S. dollar's been coming down a little bit. We've seen some decent demand, export demand, not a lot of new sales announced, but we are seeing some demand for U.S. wheat. So we've got some push in here with non-commercial traders or the investment side still liquid or covering some of their short positions. That could be the catalyst to really kind of give us another couple of weeks of it on the upside.
Now, as we look out at the new crop situation, we've seen the winter wheat get in the ground very well. Warm weather's coming, chance we should see it emerge fairly well. Advice to producers looking at that situation?
You know, the wheat is in such a hole, like so many markets are. It's hard to say go out and do a lot of forward contracting right now. And when it comes to wheat, it's difficult to ever be much more than 20, 30% forward contract because production is just such a it was just such a variable. So, you know, I would give this a little bit of room. If we see the type of rally, the potential rally that's out there, maybe we start to get some more on the books. But the situation really has to change. We have to be far more comfortable with production than we are at this point. We have to have a better idea, you know, maybe that the market isn't going to be able to move because long term, global supplies are still bearish. And the wheat markets in general are going to have to work with that. But let's give the market a little bit of room in here, maybe another couple of weeks, see where we are at that point.
All right. Let's jump over to the corn pit. Same story, 2-week rally. We're pushing back up against $3.50 on that December contract. For a lot of folks who maybe are undersold coming into this marketing year, that $3.50 might seem like a good trigger point. Do you make sales?
You certainly can. Again, as with wheat, it looks like the market wants to try to rally still. Let's go up for another couple of weeks. But because we have seen some harvest, yes, it's slow, but because we came out of the 2013-14 marketing year with ample ending stocks, there's still enough to feed there's still enough corn to meet demand. So we're not running tight. And so basis continues to weaken. And the more we see the futures rally, let's say we do get another couple of weeks of rally, I think the basis is going to continue to sag. So, you know, if you want to avoid that risk, if you want to avoid some possible basis risk, go ahead and sell the cash and then look for a chance, you know, if this is what you want to do, look for a chance to re-own. Because in the grand scheme of things, on the long-term monthly chart, as crazy as it sounds, corn is getting ready to establish bullish technical signals, saying that this downtrend that we've been in since 2012 is coming to an end. Why? I have no idea. But that's what the charts are showing. Usually, charts are pretty close to being right. We may just move into a sideways pattern, but whatever it might be, looks like the downtrend in the market may be coming to an end.
Now, what are the bullish technical signals out there?
Two things that I'm looking for. And again, this gets kind of, again, by its very nature, it starts to get a little technical, but I don't look for a lot on charts. But one of the key things that I look for is what's called a key bullish reversal. And that is where the December contract trades above the September high, below the September low, and then closes higher for the month. Well, we've already traded below the September low. The September high, I believe, is something like 360 and a quarter. We've been up to 358 and a quarter already this month, and we've still got a couple of weeks to go. And then we just have to close higher for the month, which seems like we should because we kind of closed on its heels there in September. So it looks like we'll get that. And then a momentum indicator called monthly stochastics is also establishing another bullish crossover there. So the combination of those two is a very familiar pattern that I look for a major long-term market change and trend.
All right. Let's jump over to soybeans on the oilseed side of the equation. Big move up this week.
Right.
What's driving that?
To me, the biggest contributor to the rally in soybeans is coming from bean meal. We saw in the latest, I think it was the NOPA crush, September NOPA crush, that really didn't get a lot of attention, but we didn't crush very many beans. We have a very tight supply of soybeans. If we look at those soybean meal spreads, the nearby Jan, I believe it is just going crazy. The inverse is just flying off the charts. And the back months are doing the same thing. We are still in a very tight situation. And unlike corn, where this slow harvest in corn really isn't causing a problem, in beans it is. As USDA kind of snuck in its last quarterly stocks report and then followed through within its October round of supply and demand numbers, the old crop 13-14 ending stocks was only 92 million bushels. First time that I've ever seen it go below 100 million bushels. I think you can go back into the 70s and it did, but since basically the modern markets, hasn't ever happened. We're in a very tight situation. So the longer harvest takes, the longer it takes to rebuild those supplies to meet the demand. And we're still exporting a great number of beans. And so if we're choosing to export rather than crush, soybean meal gets tight, demand stays strong, the meal goes up, soybeans follow.
And we've seen very strong demand kind of across the board on the grains and the oilseeds so far this fall. Does it look like that's going to continue?
It's going to have to, because as I talked about in my column on DTN today, and we won't go into full detail because it's rather lengthy, but the oversupply situation in crude oil, that is oversupply plus a combination of slowdown and or not as strong of demand as what had been projected, is leading us to a change in market structure itself, where future spreads are getting skewed, or they're changing their very nature. Right now, we could argue the point that because of the record harvest in both corn and soybeans, we could have an oversupply situation there. And the only thing that could save them from being a wreck is projections for record world demand. So as long as we continue to see that demand, as long as our exports stay strong, as long as our domestic demand remains strong, maybe we don't see the same problems that have emerged in the crude oil market. If that starts to slow, then grains could start to look at the same situation that crude oil is facing.
Very bearish.
Very bearish, yeah. I think I described it as hyper bearish because, again, we have this huge supply. We've got U.S. supplies, production going up. We still have large global supplies, and global demand is projected to not be as strong as what it was thought earlier. So we've actually, I guess you could say, demand's actually working down, continues to work down. So a situation where you've got more supply and less demand, always bearish in a market, and we've seen the effects that it's had on crude oil.
All right. Well, let's jump over to the livestock sector. And we did see a downturn this week after who knows how long of up movements. Fat cattle down just a quarter or so. Seems like we found some stability up in these lofty price ranges. What are you seeing?
I mean, to say anything in the livestock industry is stable or stabilized, I like that. we can go with that. I'm kind of on record saying, a number of weeks ago that it looked like the market was topping out, then it went higher. So I said it was topping out again, and it went higher. So to say that it might be topping out again, I think I'll stay away from that at this point. But that is the risk in the livestock markets, in the live cattle market, in the feeder cattle market. So we have to be very careful, because when they do establish a top, when we do get our hands around this tight supply and this tight supply situation, markets left a lot of room underneath. And if we start to see the continued strength, say, in soybean meal and corn, we could start to see both live cattle and feeder cattle showing some more pressure. Then those indications of a top that is formed could come to pass. They could actually be confirmed at that point.
Beef consumption at this point, we're still seeing relatively strong demand, it appears, and consumers are paying the prices.
Yeah, and that's kind of been the cornerstone as to this demand. We've got a tight supply. It's just basically the opposite of what we've got going on in crude oil. We've got very tight supplies. We have had for well over a year, and we've got demand that remains strong. And so that's what continues to support this market. If either side of that begins to weaken, if money starts to come out of the market and maybe go elsewhere because of these lofty prices, then even if it's just short term, we could see a very sharp break in these markets.
All right. Well, now as we jump down to take a look at the feeder cattle, we've got a question from Facebook from one of our viewers, submitted it to us at Market to Market on Facebook or at Market to Market on Twitter. We take both. Rick from Independence has a question. Do you go ahead and background your feeders, or do you sell them now? From a marketing perspective, Darren, what looks most appetizing to you?
Boy, I don't know, because you have to be able to back them up so far now because of the price of the feeder cattle themselves. So it basically comes down to what shape is your operation in. Is it one where you can take these feeders, ignore the price that you could get for them now in your local market, and then go ahead and feed them on out? That's going to be a tough call. Right now, it looks like live cattle, again, are still strong. But the real threat out there is what happens when it starts to break. I mean, then these feeder cattle that we've got that are ready right now may not be, valuable, or they may not be profitable 3 months, 4 months down the road, is when the live cattle are getting ready to come out. So I think it comes down to your individual operation. It's a very tough call to make.
If you were deciding to retain the feeders. Would you go ahead and sell out in the deferred month, whatever month you were planning on marketing them, or would you just cross your fingers?
Crossing your fingers, that's always a good marketing strategy. It's paid off well in the livestock here recently. I've been a fan of going into puts, buying puts. The problem is, they're very expensive at this point. Volatility is so high in the live cattle market. But we could certainly look at that. If you can go out to, say, the late spring, summer months, and you can still lock in a profit, I'd probably look at doing it, because there is a great deal of uncertainty about what could happen in this market. If the Dow Jones stays under pressure, if corn continues to rally, if soybean meal continues to rally, all of these things combined, even though the supply and demand situation doesn't really change, it could start to put pressure on the live cattle market.
Okay, so there's, again, risk out there when you're dealing with record pricing.
A lot of risk in any of these markets when we're talking about record prices.
Well, now let's jump over to the hog side. Hogs have been on a roller coaster all summer long, down $3 this week, or excuse me, close to $4 this week. Anything substantial changed, or are we trading in a range now with hogs?
Yeah, I think it's more range bound than anything. They're kind of filling out their cycle, where the idea was they would put a low here in, say, the September-October time frame, and then start to work back higher again. But they've just been. I know the way to say it. They've just been a crazy market. They're just being hogs, is what they like to do. And as soon as you think you get a good feel for them, they do change direction. But right now, it does look like they're wanting to trend sideways in here. Looks like it may want to stay this way for a while. It doesn't quite have as much volatility as what we've got going on in the cattle, because they're at such record highs. So you may be able to kind of time your hog trades around this range that we've built over the last few weeks.
Well, thank you, Darren, for taking the time to be with us this week, and we appreciate it.
Well, thank you, Mike.
That wraps up this edition of Market to Market, but we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll venture deep into the video vault to reminisce on a few key developments over the past 40 seasons of Market to Market. Until then, thanks for watching. I'm Mike Pearson, and have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.